Hey guys, it's Tevin from Simple Forex Options, man. It's an honor to be with you guys today for another video. We're coming to you guys with another lesson. I believe this is lesson number 9. I'm sorry that I don't make the videos as frequently as I would like. Of course, I still put out the close to the same amount that I would per week. So we're still getting about 2 to 3 per week. But they're not spread out throughout the week like I would like. I just been pretty busy lately, man. I like spending time with my wife, and I like babysitting my niece. Sometimes we babysit my nieces, so they come up. So I've just been spending a lot of time doing that. So to be honest with you, I haven't really been thinking about legitimately just putting out videos and every single day. So I'll just kind of put it off till tomorrow. But the thing is, you guys will still get them. We're still pumping out about 2 to 3 per week, so that's a good look. They just may be coming at different times than what we would expect. Also, too, just an update or news on the free week, man. It is going absolutely amazing. It's going really, really good. We switched a couple things up. We let go of course, we let go of binary mainly because I just didn't see that many people even traded it that were in my group. Majority of the people traded Forex and Nadex, so I just felt it was good to let it go. And also for those who did trade binary, I suggested that they transition over to Forex because Forex is just way more promising. We've had 6 Forex signals the past 3 days because we haven't started our trading data today yet. I will be posting our signals today, probably around 11 a.m. Mainly because of news and things like that. So you want to kind of steer clear of that and get in on the results. But as far as the Forex signals, man, we've had 6 signals in the past 3 to 4 days because we did post some on Sunday night. Of course, not everything enters, but that's good because it goes to show you that the strikes are really, really good. And our turnout, 83% of them came in profit. So 5 out of 6 of those signals came in profit. Now, mind you, the one that didn't come in profit, it literally only lost 5 pips. We exited at 5 pips, but some people stayed in and they got break even. So they got break even, and some people even stayed in and they took profit because it actually kept going past our strike when I instructed everybody to get break even to get that negative 5 pips. It went down and actually hit our take profit, for which our take profit was set at about 20 pips for that trade. It was for the all USD trade, and it just worked so beautifully. I mean, it was just amazing how it worked out. So it pretty much did exactly what I pretty much expected it to do. It just happened a little bit later than the time frame that I wanted it to happen in. So I was just more so like, well, we'll just go ahead and exit out. We'll just look for something else. And when it hit our stop loss and our break even, which it went down to where we were getting that negative 5 pips and that break even. It actually just kept going and hit our take profit probably like not even 30 minutes to an hour later. So the trade overall was good. Of course, I guess it would just be something I'll keep an eye on. We could probably take profits from that, but overall, in Forex, man, you really want to get between 50 to 100 pips a week, mainly because that's just ideal. It all depends on your account balance. A lot of times people who have lower balances, they want more pips than 50 to 100 pips a week. But for people who are trading large amounts of money, 50 to 100 pips a week is really good for them, mainly because they're trading a little bit more money than some of us or some of the other people may be trading. So it all depends. But I personally think based off of my account and my trading, 50 to 100 pips to me is golden. You just can't beat that. That's about 10 to 20 pips per day. And to be honest with you, 10 pips per day can make you rich over time. It's a lot of money over time when you kind of stretch it out over a long span of time. So we actually have, so far this week, we still have 2 days left. Even though I'm still skeptical about trading tomorrow because it's NFP, we have 2 days left and we already have 100 pips on the week. We're pretty much right at 100, and they were actually pretty easy. They weren't hard to get. We didn't have to like sit there and watch the trades or bite nails. We just put them in, and they eventually did exactly what we wanted them to do. And this is what I was saying, man. You guys see the real benefit of not having expiries, because in most forex brokers you still choose an expiry, but you can choose whatever expiry you want. I usually choose something like a day later, mainly because I know the signal won't last that long, because I'm either going to close it before then, or I'm going to it's going to hit our profit before then. It's either or. I have not been placing any stop losses this week. I think that people should place their own stop losses based off of how much they want to risk on their account balances or whatever it may be. But I just don't place stop losses. I've never really gotten into them unless it's on Nadex binaries. But other than that, I just think that based off of my experience from trading for the long span of time that I have, I've usually found that the markets respond very well to my strikes. It's very rare that around my expiry time or whatever we set, that the markets don't finish close to where we entered in at. So in my opinion, whenever I set an expiry for a forex signal, the way I look at it is just that, okay, it's still going to finish close to us, so we still may be able to take a little bit of change or get break even. So yeah, some people don't agree with that. Some people like stop losses, but it really depends on what kind of trader you are. I just don't. Yeah, because I know most brokers and most market makers and all these people, I know that they attack stop losses so heavily. And a lot of times, if you know that you are right about where the markets were going, if you are 100% confident in your analysis, to be honest with you, you don't really need a stop loss. You just let the markets do what it do. But beyond, that's my own judgment. That's the way that I view things. I can't say that for everybody else. And it's very hard to wipe your account if you're using the right amount of percentage or margin. The markets will have to move. I told you guys in one of my other videos, the markets will have to move close to 700 pips or 1,000 pips or something just to wipe out whatever margin you have. And that happening in a day's time or a short amount of time is just absurd. It's crazy. I mean, it's not even heard of. Now, the Nadex signals, we have been doing Nadex binaries dailies, and of course I have been making them very, very difficult, hard to reach strikes, mainly because I want to be 100% sure that they will win. So if the markets reach a certain critical area, I'm more than likely sure that it won't go past a certain area. And for our Nadex signals, we have had 100% ITMs this week for our Nadex daily binaries. And I know some people may not say, well, that's not much because you're doing ITMs, but actually the money actually adds up when you get a couple of wins. And to be honest with you, I don't see any problems with doing them. And it's not like we're risking like 80-20s or whatever. We're doing 70-30s, which means that you pretty much only need 2 wins to cover over one loss, or to get you close to break even, and 3 wins. If you got 3 wins and 1 loss, you're in profit. If you have 4 wins, 1 loss, you're in profit. And I found that in the past that my binary ITMs, they're performing between 80 to 100%. So I just kind of seen like, well, you know, people, I held a vote in a group of what people want to try for the free week, whether or not I want to try ITMs, OTMs, and ATMs. Most people said ITMs, and I really think that they said ITMs mainly because they found that it's suitable for the most consistent profit over a long span of time, to where OTMs and ATMs, they are good, but sometimes they're very up for grabs. And a lot of times the fact that they are up for grabs, you could find yourself in a more of a losing position than you would in a winning position. So I think winning often is good for the morale. You know, I'd rather us be in profit, winning, and then we lose one and it takes off a good chunk of our money, rather than we losing, and then we're trying to win one to make up a good chunk of the losses or our money. So I think it's a big difference. It's good for the morale of the trader. It builds the confidence, and it also keeps you in there for the long haul because you see that it's possible to win consistently. So to be honest with you, I think overall things just been good for Nadex. Things have been good. We have $120 profit per contract, which would be equal out to 120 pips. So it's actually performing a little bit better than Forex, and we haven't even taken as many signals. But it's mainly because we have ITM binaries. They're performing just naturally. They should perform well. So overall, man, the free week has been going amazing. It's been going really, really good. I like the slowness of it because I've been trying to make the schedule to where people who work full-time jobs, part-time jobs, who's busy throughout their day, they can still invest their money and still get good returns on that. And the reason why I say this is because we only have 2 posting times per day. I don't post any signals outside of these 2 posting times. We have our posting time at 4 p.m. and we have our posting time at 7 a.m. And sometimes I may push it back depending on the news, but I will literally let people know that I'm pushing the signal back based on the news. So I'll say that I'm going to post something at 11 a.m. or 12 p.m. But the reason why I say that this is so good, because if I am a full-time worker, right, and I want to trade Forex and I want to trade Nadex, but I'm not ready to actually quit my job or to stop what I'm doing, this group is actually perfect for you, mainly because you don't have to really monitor anything. I usually let people know when to stop loss, which we haven't actually had to stop loss, but I let people know when to take profits or when we have taken profits, or pretty much what to put the signal in. All they have to do is take 5 minutes out, enter in on a signal, then go on about their day. Now, and for me, it's been really good, because of course I have a lot more free time than I did before, because I'm not up trading for hours and hours at a time. I'm only on my charts, really I may monitor it throughout the day, but really on my charts making decisions. I'm really only doing that for probably about a max of 30 to 40 minutes in the day, which means that throughout my day, I have 16, 17 hours of just free time. You see what I'm saying? So mainly because I don't work, this is all I do. I trade for a living. So in my mindset, it has provided me with the maximum amount of flexibility to just do the things that I want, like writing a book or working on that, or even considering working on that, making more educational stuff, just kind of giving me free time, just spend time also too with my wife, mainly because trading is online. If I want to just travel, if we want to travel and go somewhere or go out of town, we have the flexibility and the freedom to actually be able to do that, so I mean, I'm be honest with you, man, it just doesn't get any better than this. You cannot beat the position. You see what I'm saying? So that's why I'm just very impressed with how things has been going, very impressed with the free week. And I think that this is setting us up for, or putting us in a position for those who want to trade and invest for the long haul, but they have jobs, they have work, they have busy schedule, busy lives. They can still invest their money without spending a whole bunch of time on their charts. Be honest with you, most people don't even have to spend time on their charts, because they would just be following me verbatim, just doing exactly as I do. So to be honest with you guys, I don't see why you guys shouldn't join. And the free week is almost up. That's one thing to note. Of course, I didn't accept any more requests, but it's about 500 people in there, so it's a lot of people, and it's almost up. It's going to be finished on pretty much tomorrow. Is going to be last day that signals may be posted, but I'm going to be doing the group removal on Sunday for those who don't want to trade for or trade in September in the next month. So I do suggest, if you do want to trade in September for the next month, definitely go in and hop in there. The problem is when most people miss days or miss time, it could affect the amount of profit that they could get over the month span. So that's why I usually always tell people that if you were to join, it's best to join early in the month, in the beginning of the month, because you never know how the profits may balance out throughout the month. So yeah, with that being said, our video today is going to be on the RSI. The RSI is a momentum indicator, but it's a speed momentum indicator, which means it's meant to move very fast, and it's also meant to give you a good indication of where the markets want to go. So it's not necessarily indicative of full-blown price movements, but it's very indicative of overbought and oversold areas. So as you guys see right here, as far as the ranges goes, 70 and 30 is actually considered the overbought and oversold areas. Now, some people, I think this is a regular RSI. Some people use the Wilder's RSI, mainly because he's the person that actually created the indicator. His name is John Wells Wilder. So I guess this one, it looks a little bit more lucrative. But as you guys can see, it already has the overbought, oversold areas actually marked out for us. Now, the significance of the RSI is that it's very lucrative for giving you downtrends and uptrends, which means that if the line is above this 50 level, then it's an uptrend, and if the line is below the 50 level, then that means that it's a downtrend. Now, mind you, the way that you want to use this is that you want to use it sort of as a support and resistance for the downtrend and the uptrend. So what I mean by that is that this 50 level is support and a resistance. So if it's below this level, then you want to use it as a resistance. If it's above this level, then you want to use it as a support. Another things that you want to add up there that will actually give you a nice zone that you would work with is adding a value at 60 and then adding a value at 40, which means right here, you want this to be set to 60. Let me go ahead and set this up. Bam, it gives you a nice little support and resistance zone. Yep. Let me put that as let me put that as a resistance, but I don't want it to be so. Yeah. We put it that color. So yeah, and then you want to put this one at 40. Nice support and resistance zone. The reason why I'm putting these here is because the prices will usually play within these support and resistance zones. What I mean by that is if you're looking at the markets and you see that overall, the markets are in a downtrend, right? You want to be looking at this RSI as a means of a support and resistance. What I mean by that is that if you guys can see, the RSI actually bounces directly off of this 40. But it's already in the downtrend. It's pretty much shown itself as a downtrend this whole time, which means that you can pretty bank on that being a legitimate crossover. If that's a legitimate crossover and you see that's an actual downtrend, you want to be using this area right here or this 50 line as a resistance. So it means that when the markets come back up right here to this line, you see right here, bam. You see right here, it kind of comes back up around this line, this 50 area. The markets actually reverse and go back down on the downtrend. Same thing right here. These are overbought areas. You want the markets to actually go beyond these and then come back up. When they go beyond these and come back up, then you can rest assured that you're looking at a reversal or potential reversal. Now, I remove this because I rarely ever see people add moving averages to RSIs, but you can use them that way. But let me show you guys. You see it's on the downtrend. Now, I don't know what this is. I think that market shot so strongly on this side and that side that it left this middle area looking kind of crunched up. So, but I think that there actually is data there that's to be seen. We just probably got to put it in the screen by itself. So once you put it in the screen by itself, I hate when free stock charts does this. But yeah, it's probably just not enough data to be able to, okay, I can see why it's doing that. So we can't even use that as information. So let me take it down on maybe a larger time frame. It's doing the same thing. The time frame. Yeah, I didn't want to have to use it like this, but okay, well, just to show you guys what it looks like. So as you guys can see, you see it's above, right? And it's actually treating this as a support area, bounces off of this. And as it bounces off, bam, because this is a strong uptrend because the momentum is very strong, you're going to see that it's treating this like almost like a support. Right here, it bounces off. And as you guys can see, there's another support and resistance line that I have here because I just have these on my charts. But there's another support and resistance line that I have here, and it bounces off of this perfectly. You see it goes above, then it starts going back up into an uptrend. It's the same thing, comes down right here, and it bounces off of this, get a retracement, and then it goes back up into an uptrend. These are really good for retracements on trends. This is actually the way that you're supposed to use them. You said that these overbought areas, some people actually take them when they cross back down the overbought area. You can't do that because as you can see, when it crosses back down, it still goes in a downtrend, but I don't do that. I usually use that as a means of not to trade, not as a means to actually take a trade. So it really all depends on what you like because I'm a trend trader. I don't really look too much for reversals. I more so look for retracements. And in me looking for retracements, I don't really care whether or not something hits an overbought, oversold area as far as placing a signal. I just more so care whether or not it's for exiting a signal, getting out on the signal, or getting an indication that the markets will retrace so I can actually get in on one. So as you guys can see, overbought, oversold areas, because the momentum is going to continuously pushing up. And right here, it bounces off. And it still goes into a slight uptrend. It don't look like much because it's on the daily charts, but if you were to zoom in on it, that would be like 40, 50 pips of movement probably. Right here, 17,700. And yep. Well, that's about 30 pips of movement, which is still solid. Right here, you see it drops below. Once it drops below, you want to be looking for your support now to come from this line. As you guys can see, it doesn't actually hit this line. Somebody still could take this, but it doesn't hit that line. But, you know, like I said, somebody still can take this. If it crosses back above this support line that you have right here at 60, then you could get in on that one for a short-term trade. As you guys can see right here, it breaks back down below. You don't want to take a sell option, but it does come back down here and it goes up, but it doesn't cross beyond this new support line. So what you're really looking for is for something to bounce off of this. As you guys can see right here, it's a little bit closer. It bounces off, and that could be a short-term trade, but I wouldn't take that because it doesn't bounce off. So as you guys can see, it goes up. You get a lot of price action, but it crosses above. So like I said, it's another way you can use that. When it crosses above, now you have a call option right here. Bam. As you guys can see. And then it goes back up, comes down low. And of course, you wouldn't take those because it's still on an uptrend. You want to look for something to either cross. If it's above the RSI, you want to look for it to cross above this support right here, or bounce off of that support, or you want to look for it to bounce off of this support. If it crosses below the support, you want to kind of wait it out to see what the market's going to do. If the markets are still in an uptrend and it crosses below the support, then what I would say is go ahead and get a call option if you see it cross back above that support area. If you see it goes down and touches this area down here, then I would say you want to probably wait it out to get further confirmation of whether or not the markets have fully crossed over for a downtrend. So this is actually, I'm giving you guys tips and ways that you're supposed to actually use the indicator, or ways that I would have used the indicator. Now, personally, me, I really only use RSIs for as a strength indicator, which means that there's ways that you can actually use a RSI to where it would be just indicative of the euro, not the euro USD, but just the euro price in itself. And if it's above here, then you know that it's oversold. If it's above here, you know that that is overbought. But if so, under here, you know that it's oversold. The idea with that is that it gives you indicative of the strength of the individualistic currency. So that's actually the way that I use it. I don't actually use it in this way, mainly because I feel that I have better indicators that gives me a little bit more indication of where the markets are. But overall, the rules that you want to take away from this lesson is that if it's above this 50 level, you want to take only call options. If it's below the 50 level, you want to take only sell options. And you want to use these support and resistances areas right here, this 60, this 50, and this 40. This is the cream and the crop and the butter. I know I just tossed that in there, but this is the cream, the crop, and the butter of this RSI trading system, which means that you want to look for the actions around these things right here. They will tell you everything that you need to know about where the market wants to go. And because it's a speed momentum indicator, it's going to give you a very quick responsiveness on where the markets are going and what the markets want to do. Usually the average period that's used with these is the 14 period, so I don't see really any reasons to change that. I haven't tried any other periods or tested them out, so I can't actually give you guys an indication of what you should use, but I would say that this period works just fine. And depending on the time frame that you use, of course, as you guys can see, this works very good for the daily time frames. If you use them on lower time frames, you just more so want to be more critical about confirmations. And that's one thing I think that you guys should think about. So yeah, if you do not use these with the 70, the 30, with the 60, the 40, and the 50, if you do not use any of these lines, I promise you and assure you, you will be confused about what's going on. You won't actually have any order when using this indicator. So that's why I personally recommend using the 50, using the 60, and using the 40 on any of the oscillators or these momentum oscillators and indicators. I always have support and resistance levels on them, and I also always have a 50 level on it, which means there's a midpoint or mid level in between the overbought and the oversold that allows me to make my decision. And the reason why I always have that is because I want to look for crossovers, I want to look for bounce offs, I want to look for support and resistance levels, because the market, the candlestick markets, is not the only ones that have support and resistance levels, as you guys see on these charts right here. It's these kind of indicators too that have them as well. And as you guys see, it is very responsive to these support and resistance levels, very responsive. And because it's all stationary in one place and it's always there, see, like with these charts, you have to keep adding support and resistances, mainly because the markets is going to shoot out of them at one point. But with stuff like this, the RSI, for example, you won't have to ever change these or remove them. It's just giving you a good indication over a long span of time. And once you set them, you could just leave them and make your decisions based off of those for however long you would like to do so. So thank you guys for tuning in. I hope that these lessons are very helpful. If you have anything that you would like me to do a lesson on or to do a video on, please leave it in the comments or put it in the free educational group, and I will try my best to get around to either talking about ways that I've used the indicator, ways that I recommend using them, and then also to talking about potential ways that you could use the indicator if I haven't used it or don't use it. So thank you guys for tuning in. Simple Forex Options. Deuces.